What's up, guys? This is Carter Thomas with Coin Mastery TV. We are back in action. If you are a returning podcast listener or YouTube subscriber, if you could post this on one of your social accounts or like this on YouTube, when you take a week off, the algorithms, especially of YouTube, do not seem to keep your growth up. So the more you guys can just show that we're back, we've got a crowd listening, the better we can jumpstart it back up to the top. That'll be amazing. Thank you for all the awesome conversations on Twitter. It was good. It was cool taking a week not doing videos. It allowed me to think about other stuff. Didn't really not work. I just worked on a few other projects that I've been putting off, both related to crypto and just in general. So it was a good change of pace. Glad to be back. Plan is to continue doing these Monday through Friday and then go from there. I'll talk a little bit about a couple of realizations I had that hopefully will benefit everybody involved as it relates to content. And we'll be talking about that in a little bit. But let's just dive into it, shall we? Let's just get right back into it. Talk about what's on everyone's mind. So popping open the good old 4-hour Bitcoin chart here. We had a heck of a run in the past few days where it's really gone up, almost 12% now in just a couple of days. So I guess it started on the 5th. Today it's the 9th. So the last 4 days, we've had a really solid run. Saw some resistance right around 4,400 as to be expected. We've seen that level a couple of times before. It broke through, and now we're just seeing these beautiful green candles that everyone loves. But it is interesting, isn't it? Because we dream of these green, we dream of it going up, but then as soon as it does, it opens up all these other new stressors where, well, now Bitcoin's going up, but that opens up all these other questions and all these stressors. And that's one of the big reasons why this content is what it is. This is why it's not shot calls every day, because unless you have a strategy that works in any situation, which is really what we talk about, buy the dips, et cetera, this isn't going to change. It's not that the amount of stress you have won't change unless your behavior changes, unless your strategy changes. And if you get a great call on something and you make a bunch of money here, if you're not sure why that happened, or if you're not sure how to repeat that result, you better believe that when it goes down or goes up, or when it gets even more volatile, it's going to be really hard to keep that money. So I think that it's always good to be aware of what's happening, but also prepare for it. Right? This is the time where you prepare for, is it going to go way down? Is it going to keep going up? Is it going to go sideways? What do you do? What's the strategy? And I'll obviously share my thoughts on what I think, but realize that, guys, this is your call, right? I am going to be right just as much as anyone else on Twitter is going to be right, just as much as someone throwing a dart at the dartboard will be right. So we can take educated guesses together, but the only way to increase your probability is to listen to as many people as you can, crystallize it through your own lens, through your own goals, and go from there. But it's been awesome to watch it go up. And the big reason from everything that I've seen is because there's three main reasons. The top one, which if we pop open coin market cap here, that's kind of bright. Pull that down a little bit. When you look at coin market cap and you go up to, you click on this up the top up at the market capitalization, you'll see a few different charts. So the first one is the total market capitalization. You can see that it's actually going up. So at first it might look like, well, there's a lot of new money coming in, right? This market cap won't just pop up without fresh cash flowing in. But then you look at everything excluding Bitcoin, which almost has an inverse relationship. And the key is this third graph where you look at the Bitcoin dominance. So if Bitcoin is consistently, it's 50% of the entire market. So against any in particular coin, it's an order of magnitude bigger, even with Ethereum. I mean, it's 2.5 times bigger than Ethereum's market cap. What this means is that there is a flow into Bitcoin from other stuff, from altcoins basically, right? Yes, there is definitely some fresh new cash coming in, but there is a flow in from altcoins. And the real key here is that it's not one-to-one. So if you like for cash to flow from altcoins to Bitcoin, there can still be fresh cash coming in, and it may even not measure up with the billions that it does go up in, because Bitcoin is so much bigger than everything else. In other words, a very small increase in Bitcoin's market cap can be a huge inflow from altcoins. These are all very small relative to Bitcoin. So there can be a little bit of new cash come in, but there can be a massive amount coming from altcoins. And that's what you can pull from these charts. So anytime you're wondering, where is this cash coming from? This is one pretty easy and basic data point to look at. The reason why it matters to you is because it can help you make better decisions on whether or not you should be buying Bitcoin or buying altcoins. You know, is this a dip or is this something else? Whatever it may be. So I thought that was that's interesting. So that's the first thing. The second thing is that LedgerX is going to roll out pretty soon. If you haven't seen LedgerX or heard about LedgerX, it is the futures platform only open to institutional investors. That is going to be a big deal, but you also have to have a certain amount of liquidity in the markets to be able to play in that futures sandbox. So you're going to see a lot of institutional money buying up Bitcoin in order to be able to do the futures markets. That's the second reason. The third reason, which this gets into the whole conspiracy theory behind Bitfinex, and I guess I could pull this up right now. But if you go to BFX data and you start digging into the margin funding, let's go to Bitcoin margin funding. You can start to see that there is a massive influx in margin accounts. There's also a big drop in shorts over the weekend, which together that can really boost the price. Now, the reason this matters is because technically more margin funding, more margin trading would mean that there's more cash coming in. But there's a whole conspiracy theory about, well, is Tether really, are they just printing money to allow for margin accounts? So do you see what that means? Like, people can go long on Bitcoin using Tether as collateral money. They can margin trade against Tether, but Tether is just made up. So it's the same thing as like the Fed, where like they print more money and then the economy gets bigger and people can spend more money, but the money was made up to begin with. It was interesting. I went to this dinner down in LA, and the founder of Tether was at the dinner. I didn't get to talk to him because it's kind of inappropriate to ask a question like that, but he seemed like a great guy. He seemed like a really smart guy. I think it's important also. Bitfinex and Tether are not the same things. But that's a third thing. It's just the margin and the short profile of Bitcoin. All right, so I think a lot of you are probably just like, okay, well, what do I do? What does this mean? What should I do? Should I buy? Should I sell? Let's go back here. Before we dive into this, let's just look at where we are historically speaking. So everything's going up, but the big gorilla in the room is that Bitcoin is going to split first on October 25th, and then again in November for the SegWit 2X, assuming these all go through, obviously. But this is kind of what the plan is. And if you remember, back in August, on August 1st, we had a Bitcoin Cash. And Bitcoin Cash was a much bigger deal because it was the first big one, right? Bitcoin Cash, SegWit wasn't really a hard fork. But if you go back and you look, where is it? August 1st, right here on the charts. After the fork, you saw a huge spike. And before the fork, you saw a major dip for a variety of reasons. This is probably just people trying to push the market down in order to accumulate more Bitcoin for the fork. After the fork happened, there was a huge surge. But remember this very, very basic fundamental. markets are driven by people, especially in this. There's not a lot of algorithmic trading. There's not a lot of bots. There are, but it's not nearly as big as the people. And so people look at this and they're like, oh, well, after the fork, everything goes way up because everyone's sold off their Bitcoin Cash. And so Bitcoin price is going to go big. This time, a lot of people are like, oh, well, if I buy up a lot of Bitcoin after the fork, I'm going to have all this Bitcoin gold, which I can sell, and then I'm going to make all this extra free money. But look back at what happened in history. We already saw the unknown was already done for what happens when there is a split. So you better believe that the quote unquote smart money is probably going to do the opposite of what the not smart money would do. So the not smart money would probably look at this and be like, well, last time, if I had Bitcoin, I would have made all this extra money from the Bitcoin Cash. Of course, it's going to happen again. But experienced traders, experienced investors with a lot of money and a lot of experience would look at this and they'd say, well, it went down before the fork. Why don't we drive it up before the fork and get people the illusion that this is going to continue to skyrocket after the fork, right? Like, I don't know if that's what's going to happen or not, but that's what I would be thinking about if I had, a $40 million fund, or if I was a whale, if I had 25,000 Bitcoin. That's what I would probably be doing, because everybody thinks it's just going to go up, that they're going to make all this free money after the fork happens. And if that's what everyone thinks, I mean, you can go on Facebook, you can go on Twitter. That's what people assume, especially the inexperienced traders. They assume that it's going to be the same as it was last time. And remember, the entire purpose of markets, whether you like it or not, is to take money from people that don't know what they're doing and give it to people that do know what they're doing. Do you see what I'm saying? Like, that is how traders, experienced traders, bankers, hedge funds, whatever, that's how they would look at this. So I see this price increasing, and instead of shooting up after the forks, I would imagine that it may drop, because that's going to cause a lot of confusion and a lot of panic selling. And so people, liquidate their positions, and then they end up losing even more money. So take that for what it is. Me personally, I've been buying a little bit along the way, but I just don't like uncertainty. I would way rather react to uncertainty than try to predict uncertainty. Fear, give it to me all day. I'll buy that any day of the week. But uncertainty, it's just a waste of time trying to predict that. Like, if you can't control that with a lot of money, I don't know. I don't think that it's necessarily a very sound plan when you are banking on something happening that you have no control over. It doesn't usually work out very well in any situation, but definitely not in markets. The other thing you need to know, if you don't already, is you got to do your own research on what Bitcoin gold is. This is not like, I think some people, and I say this because this is just what I've seen. I've done a lot of research. I think a lot of people assume that they're just going to get airdropped this cash, and they're going to get it, go over to Bittrex or wherever and sell it and make an extra couple $1,000 or however much Bitcoin you have, and be like, great, let's go back to business as usual. They don't know much about Bitcoin Gold. They don't know much about the technology. Is it a good coin? Anything about it. It is, that's fine. But what you may not know is things like it's already got a pre-mine, meaning a majority of that coin has already been mined by people. So the amount that's going to be liquid in the markets is relatively small. So imagine if we made a CT coin, and I was like, it's going to be a Bitcoin fork, but I've already mined 85% of it. So everybody's going to get some. It's just you're only going to get a tiny piece of it, which is why this is considered like kind of a scam, not a scam, but like sketchy in many ways, because a lot of it's already been mined. Like, that's crazy, right? So it's not the same beast as Bitcoin Cash. It's a different market. That's why I think that this is going to behave differently than this. I think we're baking in this anticipated effect earlier than we should. And how that plays out, I don't know. Now, I think that probably does mean that a lot of these altcoins are being deflated because cash is flowing out of them. I also think that this is a long time coming. I think that a lot of these valuations are, frankly, out of control, and something needed to happen at some point for the prices to come way down. So I think that there's a lot of good deals, but really what it is that you got to find the coins that like have a long-term potential. I think that you're going to be harder pressed to find a quick bounce off this than in like mid-July or whatever, based on the fear of the fork. I think this time people are actually moving their money to Bitcoin because they have some new thesis of that. And then for the money to flow back into altcoins, psychologically, that's much harder. So what I would do, like I always do, and what I would recommend anybody do, have your short list of coins that you like, that you've been researching. If it drops to a level, and like let's pull up, I don't know, Dogecoin. I don't know. I don't own any Dogecoin. I actually have never done much research at all on Dogecoin. But if you look historically, Dogecoin's kind of a bad example because its chart's just disgusting. But you would probably, in fact, let me go back. Let me look at like Neo. Still own a handful of Neo, even though I did sell it the other week, actually right around this price, which is kind of funny. What you do is you look back at the chart and you look at, okay, what was previous resistance levels, what was previous support levels, and you bank off that. Maybe you do a Fibonacci retracement, but either way, you got to like the coin and it's got to fit into a buying thesis, right? Don't just buy it because it's a dip. Buy it because the price is in the buy zone that you see as a good buy. And just as a side note, guys, the reason I don't I'm not sitting here telling you this is what you should buy, or this is what I would buy, this is the price I would buy it at. One, there's no way for me to be, that's not going to help you make decisions long term. You're just going to keep coming back to me or somebody else. And two is that I can make 25 predictions correctly, but if you only take action on the one that isn't right, that's it. You'll never watch another video again. And that's why I don't do it, because that's just the nature of this business, is that you're only good until someone loses 5% from one of your calls, and then you're done for. That's just I'm not interested in that. That's why I don't do it. Feel free to go on and pay someone to give you some charts or some calls. Good luck making money doing that. The best thing you can do is start researching these coins, learning which ones you like, which ones are the best, and getting as much data as you can. Real quick, let's see why this didn't load. There's a Steemit post from the CEO of Binance. He posted this. I thought this was really interesting. I tweeted about Binance having a lot of new coins, a lot of new cash flow, and I think that's always an interesting trend. And you see if Binance is assuming the role of listing all the coins that Bittrex isn't, because Bittrex is a US company and they have different security things that they need to think about. Binance is going to get a lot more cash, right? They're going to get a lot more flow. So that's the first piece. The second piece is, and the reason why I was kind of on the fence about it is, well, is Binance sketchy? Who runs this thing? Are these guys going to just peace out? And this post, I'm not saying I'm like fully endorsing it or anything, but at least it shows that these guys have, like, they're thinking about things that are legit in terms of the long term, meaning they think overpriced ICOs are not a good thing for the ecosystem. They're not a good way to make money for anybody. And that's a good sign that this is the kind of thing that the CEO of Binance is talking about. So the reason why this is important, if you see all this cash flowing to Binance, you still need to go vet the process so that if you invest in any coin on the platform, you have a good understanding of it, so that one, you don't sell quickly, and two, that it's actually going to go up. So this is a good example of the kind of due diligence you want to do before you start making a shift over to a new exchange and putting new money on that, which incidentally, is a very, very important point as we go into the next month, which is going to have 2 forks. Do not keep your money on these exchanges. Okay? I'm not saying anything is going to go wrong, but you need to control your private keys. You need to have the coins on your wallet or on your desktop or on your hardware wallet. If you do not know what wallet your coin requires, go on Google and type in the name of your coin and then wallet and go get it. Like, I cannot stress this enough. This is about security. It's also about just controlling it, because there's so much price action that happens during these swings that often, if you don't have control over what you're doing, you're going to freak out and panic, and it's not going to be good. So get your coins, get control of them ASAP. Just Google it. All right. It's not that hard to do. You got to go do it. A couple other kind of bigger things that happened last week, or things that I started to notice. And over the next couple of weeks, hopefully I can share with you a few of the findings or thoughts that I found very interesting this past week as we didn't do these videos. First one, which I did a poll about, is what people think would happen to the crypto markets if the global markets go down, specifically the stock market, but it's for the most part what I mean by a global recession. In other words, if stocks, bonds, currency, if everything starts to go down, what happens to crypto? And like 84% of people said that if the macro markets, capital markets go down, crypto is either going to stay the same or go up. And there's obviously, it's not black and white. It's a way more complicated than that in terms of like how the recession happens and, the timing of it all and whatever. I mean, yeah, I totally get it. But most people thought that everything going down would be a flight into crypto. And I personally, I'm not convinced that that's true, because I think a lot of people underestimate how hard it is to react when things are going down, because it's not like your stock portfolio goes down. It's that your salary goes down. It's that companies start laying off people. And I think that it's a little cavalier for a lot of people to think that you can have the same strong hands while the rest of your income streams are getting squeezed hard. The reason I say this is because this is exactly what happened in 2008 to 2009. While everything was going down, I was working at a startup, and salaries getting cut, people were getting fired. Every stocks were going down 80%. And like the idea of the average person moving money into some highly speculative thing, for the most part, that would have been a very foreign concept. A lot of smart people who had free cash crushed it, and they made so much money on real estate and stocks and everything else. But I thought that was really interesting. I think if everything goes down, crypto will take a big hit too. And then after a while, people may put money back in, but I don't know. That's one I'm going to keep an eye on. I have no idea what's going to happen with capital markets. I do know that the geopolitical climate is becoming more and more fragile. Fear rarely does well with anything except for gold. And people often equate Bitcoin to gold, which I think is not a good analogy, because while they do, quote unquote, store asset wealth, one is very, very low volatility and one is very, very high volatility. And that is a much stronger investment signal than what asset class we arbitrarily put it in. So I don't know. Keep that in mind, right? You got to be super real about that. Like if your salary gets cut 25%, if you lose your job, if it's like that for 2 years, are you still a holder? If you are, great. If you're not, you got to get into a point where you only have enough money in crypto where you still would be. Because if you start making those kind of decisions based on macro forces, that's when you get worked big time. Another interesting thing, this may be my most popular tweet actually. I wrote 2 ways Bitcoin goes to 10,000. Big money comes in, millions of new people buy small amounts. It's not charts, not stories, it's math. This came from going to a dinner with a very controversial marketer, a guy named Tai Lopez. And there was a lot of really top crypto people there, men and women, fund managers, accountants, attorneys, founders, a couple of original Bitcoin developers. And everyone brought in a very different perspective. I would say I was probably on the marketer investor type, more of like a marketer kind of, that's what I could help with, right? Like the marketing angle of crypto in the sense of when you look through the top 200 coins, there's not a lot of coins that are very good marketers. Like all they talk about is tech, right? That's all they talk about is development and features and wallets. They don't talk about marketing stuff. You don't see email opt-ins and things like that. And there's a lot of things talked about that I agreed with, a lot of things I didn't agree with. There's obviously a lot of different methods that I do and do not agree with in the marketing world. So, hold your judgment for someone else, because whatever. But what I think I did walk out of there with is that you and I, every day, want this thing to go up. We want everything to go up. We want Bitcoin to go up. We want Ethereum. We want all of our coins to go up. That's great. And what we're thinking about is, well, I can't wait for this big money to come in, which it will, right? I mean, eventually they'll start to put in pensions, funds, everything. We'll start to put a little bit of money in, which is a lot of money in the crypto world, a couple $1 billion here and there, and it'll massively expand it. But this guy at the dinner, I can't remember his name, but he was one of the original investors in PayPal and LinkedIn, like the first money in both. He invested in 100 companies, like super gangster investor. And he had a great point, because you go around the table at these masterminds and someone asks a question, and then people provide, like random people provide their thoughts on an answer. And I think one of the questions was, how do we get this thing bigger? And his answer was really insightful, I thought. And he said, we need to get more people to own $500 worth of crypto. Because if we can get way more people to just own a little bit, they're going to get sucked in and they're going to get hooked on it. They're going to care and they're going to tell other people. That's the nature of this kind of market. And I thought that was a big light bulb moment for me. I think for the entire week, that was really the thing where I love these videos. I love these podcasts. I love chatting with you guys. I love interacting with you on Twitter. This is a huge part of my day, and I will definitely keep doing this. The problem, however, is that this is not getting you to go buy crypto. This is getting you to invest and take the crypto you have and be smarter about it, which is very, very important. I am in a unique position where I have the skills and I have the distribution reach to potentially go get hundreds of thousands of people to go buy $100 worth of crypto. And I don't have to do it in like a sketchy way. I can do it just by getting in front of a lot of people and offering them really good stuff. But I haven't done that yet for whatever reasons. But I think that at the end of the day, all I care about is hitting huge goals financially, helping people along the way, and having a great time doing it. But at the end of the day, it's like, how do I get to that huge financial achievement? And the only way is if this market, goes 5, 6, 10 times bigger than what it is, and I'm in the ground level on some of these winners that go big. So the only thing I can really do to control that, right, to control my environment, is go out and not just educate people on this, but go out and actually get them to set up a Coinbase account and buy $200 worth of cryptocurrency. And that's just that process. Like even if I charge someone, hey, here's a $20 course, come buy it. Like that's not gonna make a dent in my goals. What will make a dent though is that if the whole market goes way up, and you'll benefit just as much as I do, if not more, if you get the right coins. That was a big realization. Now, you may feel one way or another way around that, but the fact of the matter is, for this market to go way bigger, we need lots of people to start not just educating the public, but getting them to go buy it. Because I'm sure many of you have talked to your friends or family members and been like, oh, you got to check out this Bitcoin thing. And everyone's like, oh, that's cool. And they know about it, but very few of them actually go and buy it, right? The leap that's required to get them to buy it. That's the key. And that's what we need. That's what I need to do. That's a big thing that I need to do that I haven't done yet. And that I'm going to do, because it is the number one way for all of us to experience these levels. Or I shouldn't say it's the number one way. Like, it's the number one thing I can do to impact this. So it was an interesting realization, for better or for worse, but it's the truth, and so it goes. Last thing I wanted to chat about is I was listening to Tim Ferriss's new podcast. You guys know I'm a huge Tim Ferriss fan, and he apparently that Ray Dalio podcast was one of his most popular ones, and so he did another one about investing. And Peter Thiel, very controversial but very successful entrepreneur. He's one of the PayPal founders, and I think he was the first person to invest in Facebook and things like that. He has a very unique personality, to say the least. Very left brain, very contrarian, very libertarian. And he had some short but extremely insightful and helpful knowledge on this podcast. So I'll link this up. I would recommend checking out. I thought that Chris Sacca and Peter Thiel, two extremely different personality types, both had some of the best advice I'd ever heard. And Peter's advice was as follows, which I think matters most to you as a cryptocurrency investor. What he said is that when you treat investments like lottery tickets, it rarely works out over the long term. And the reason why is because when you invest a small number times a big number, it usually results in a small number. Meaning, if you take $500 or $1,000 and put it into some coin that has a $2 million market cap, even if that coin goes up to, let's say, it goes up 20x, which is insane, 2,000%, right? The equivalent of that is very hard to make a big amount of money on your ROI. Versus if you take all of your money and you put it into 3 coins, so instead of investing 1,000, you're investing, let's say, 20,000, and then that coin goes 20x. Now you've got a real amount of money. And I'm not saying that those numbers are accurate for everybody by any means. I know that we all have different. Some of you are, $500 is a lot of money. Some of you, $500,000 is not a lot of money. But I think he had a really good point, is that when you spread yourself thin, he calls it spray and pray. As an investor, it rarely works out for you over the long term. Like, you need one of those to go so big to pay for the whole boat that it becomes very, very difficult. And often that is the way a lot of people go into investing. That's also why, for anybody who's on the newsletter, that's why I'm a big proponent of putting most of your money into the big ones, because you got to concentrate in the ones that you know are going to go up long term, and then you got a couple others. So I think that was one. The second piece of that, which I thought was really helpful, is that he talks about when you're forced to concentrate your investments into fewer coins, it forces you to have higher levels of conviction into what you're investing in. If you can take money and put it into 40 different things, you're not going to do the research on all 40. You're not going to do the deep dive, like real amount of research that's required to guarantee that that's a winner. And more importantly is that if you don't do that research and you just rely on somebody else to tell you what to buy, the chances of you selling it when things go bad are 95% higher than if you did the research yourself, that's another piece of it. But I think that there's a lot to be said for only being able to invest in a few coins and being so diehard, like I know what I'm investing in, and sticking to that and doing the work on the research and buy side, and then having to eat your own lunch as it goes up. I think that's really scary for a lot of people, but in reality, that's how the winners do it. That's how real investment gangsters crush it. And if you're not thinking like those guys, like what are you doing in crypto, right? Like go put your money into an index fund if you don't want to play like these guys do, right? So I thought that was super helpful. There's another person who's pioneered this. It's called like the turtle method of investing, which is a similar method where you take your total budget and you're only allowed 4 trades, or like 4 buy trades per year. And imagine how patient and how serious you would be about those trades if you only were allowed to do it 4 of them each year. I think that's the same idea. And that's one of the biggest takeaways I got. I looked at my portfolio and I've got all these coins that are left over from scalp trading. I've got the top part of my account is pretty concentrated in a couple big ones that I believe in. But it made me realize I need to just double down on the ones that I really believe in if I want to hit these huge goals. Now, it may feel like, well, that's crazy. That's a lot riskier. But it's also, that's the whole point, is that you don't get the chance to even try that risk anywhere else. That's what's so unique about this particular market. And if you're not going to try to get that upside, it's honestly, it's like you're wasting a huge opportunity. That's what's so special about this, is the potential to go so big. So I think we'll leave it at that. I'll stop there. I think for everybody listening and watching, right? Like the bottom line with these coins, with Bitcoin, with altcoins, is that you got to ask yourself, why would it happen exactly the same way it happened before from a market sentiment standpoint? Why would that happen the same way, right? Like why would a very, very smart, very wealthy investor trader, why would they let that why would something that they knew was so predictable happen again? And the answer is they probably wouldn't. So I think that we're going to continue to see a run for the next few weeks. I think it'll go up and down a little bit, but it's going to keep going until we hit the 49.80 level, like the previous resistance. And then that's going to be showtime, right? We break through that. It's going to be completely crazy. And then from the altcoins, it's the same strategy as always, guys. It's like if you got a great coin and you got to verify that the price looks good on the charts. If you don't know anything about charts, look at, this is Navcoin. I don't own any Navcoin. I don't know much about Navcoin. If you don't know anything about charts, all you got to do, look at the previous resistance levels, like where the prices topped out. And that's typically where the new support comes in. So look at this, Nav. Previous resistance looks right around where this price is. You got to verify your decisions. That's how you make the decisions whenever you're buying the dips. And then obviously you got to research the coins and make sure you like what you're buying. That's it. We'll obviously keep coming back to these stuff, but we'll stop it there. All right, guys. Well, thank you for watching so much. Glad to be back. Hit the subscribe button if you haven't already. If you're on the podcast, leave a review. Could always use a couple more reviews on there. And I will see you guys tomorrow. Peace out.